All right, folks, buckle up. What we're about to get into today isn't just about the numbers in your brokerage account. This is about the complete reshuffling of global wealth over the next decade. And most people have absolutely no idea it's happening. While every mainstream media outlet is fixated on diplomatic fluff and feel-good press releases, while the average person is debating tennis tournament results or tourist attractions, a secret set of negotiations that could trigger a full-blown financial tsunami is quietly unfolding behind the locked doors of a private residence just steps from the Élysée Palace in Paris. On one side of that table, Washington's power elite carrying ultimatums about protecting dollar dominance, containing inflation, and stabilizing supply chains. On the other side, Beijing's decision makers, who happen to hold the keys to the entire global green energy transition, solar panels, electric vehicles, and a massive stockpile of physical precious metals. Why Paris? Because Paris is the one city in the world that both sides can actually agree to sit down in. It's the flag bearer of European strategic autonomy, and right now it's the only neutral ground where the US and China can engage in the kind of deep back-channel horse trading that doesn't make front-page news. And the most critical, most sensitive, most financially explosive card on that negotiating table isn't tariffs. It's not semiconductors, it's silver. Yeah, I know what you're thinking, silver. That metal that always lags behind gold. The thing people jokingly call poor man's gold. Let me be direct with you. If that's how you see silver, you are going to be the exit liquidity in the next big redistribution of wealth. Beneath the surface of these Paris talks, silver is the one physical fulcrum that everything else pivots around. Where its price goes depends entirely on whether these negotiations end in a handshake or a complete blow-up. Today, we're going to tear open the inside story of the Paris talks, and I'm going to give you two very different futures. If you follow this to the end, you'll either see silver grinding sideways above $80 while it systematically bleeds retail traders dry, or you'll witness something that has never happened in human history, silver screaming to $150, $200, or beyond. This isn't a drill. This is the final battle for your financial future, what silver actually is and why Wall Street lied to you. Before we get into the negotiation details, we need to get something straight. What is silver really? For the past 40 years, Wall Street has been running a masterclass in brainwashing. They told you silver is just an industrial metal. They told you supply is abundant, prices should be suppressed, and it lost its monetary relevance decades ago. That is the single biggest lie in modern financial history. Silver is the most electrically conductive metal on this planet, bar none. It's the irreplaceable lifeblood running through every solar panel, every high-performance AI chip, every EV powertrain, and every precision-guided weapon system on Earth. But here's what matters even more. Silver is the single weakest link in the entire dollar hegemony chain. Pull up COMEX and LBMA data. The paper silver trading volume dwarfs the actual physical inventory by hundreds, potentially thousands, to 1. That $80 price tag you're looking at right now, it's being artificially manufactured by Wall Street's massive short book sustained through the infinite printing of paper contracts. Why suppress it? Because if silver breaks out the way gold has, it rips the mask off the inflation is under control narrative. It forces the entire world to confront a very uncomfortable truth. That green piece of paper in your wallet, the US dollar, is losing its ability to anchor itself to real physical assets. China figured this out a long time ago. Over the past decade, China hasn't just been stacking gold. They've been quietly, methodically establishing invisible control over the global physical silver supply chain. So what's really happening in Paris? It's the final showdown between the US and China over who gets to set the price of the entire green energy economy going forward. And silver is the centerpiece of that pricing war. Scenario 1. The grand bargain. What happens if they actually cut a deal? Let's look at the first possibility. Both sides blink and they walk out of Paris with what insiders are calling the grand bargain. Picture this. The US agrees to dial back the most punishing tariffs on Chinese green energy products and eases up on AI chip export restrictions. In exchange, China agrees to continue supporting dollar system liquidity and tacitly keeps its solar panel export pricing in some kind of alignment with global market norms. If this script plays out, silver doesn't explode, it enters a high-range grind and bleed mode that absolutely destroys retail traders. Why won't silver crash? Because Beijing will never allow silver to fall back to the $20 era. China's current strategic doctrine is resource physicalization. The higher silver goes, the more embedded resource value sits in every solar panel and every EV China exports to the world. In a deal scenario, China will use the Shanghai Gold Exchange as a pricing anchor, use sovereign buying to prop up physical premiums, and keep silver pinned firmly above $80, potentially above $120. Why won't silver just rocket to $200 overnight? Because Washington needs to save face. If silver goes parabolic and out of control, the Fed's inflation mandate is dead on arrival. Treasury yields would spike violently on inflation expectations, and that would detonate the US housing market and banking sector. So what do they actually do? They reach a kind of mutual assured destruction equilibrium. The US side, working through JP Morgan, HSBC, and the other big bullion banks, continuously drops paper short positions at key levels to cap any explosive breakout. Meanwhile, China deploys its sovereign wealth funds and state-owned enterprises to hoover up physical metal every time prices dip. The result? Silver behaves like a caged animal. It keeps testing the $80–90 ceiling, and every time you think it's going to break loose and fly, some well-timed interest rate rumor or a conveniently manufactured inventory revision slaps it back down. This high-range chop is the most lethal scenario for retail traders. You'll see silver whipsawing violently between $80 and $90, and every swing is a precisely calibrated detonation device for anyone playing with leverage. For the two governments, it's a perfect outcome. America gets to maintain the last shreds of dollar credibility and avoid a hyperinflationary blow-up in real time. China keeps silver elevated enough to protect its domestic green industry profit margins while making early inroads with yuan-based pricing power. For you, the individual investor, if this is the scenario you're in, you need extreme patience. You're earning currency debasement money, not system collapse money. Think slow and boring, and definitely don't lever up. Scenario 2. The blow-up. How silver hits $150–200 if the talks fall apart. All right, take a deep breath, because now we're going to look at the scenario that is keeping global elites up at night. The talks collapse. Imagine this. Washington pushes hard, demanding China gut its so-called excess capacity and threatening to weaponize the SWIFT financial system to cut China off. Beijing doesn't flinch. China hits back and announces end-use restrictions on all critical strategic metals. The moment Paris falls apart, silver transforms overnight from a commodity into a financial nuclear weapon. Here's the logic chain you need to internalize. When diplomacy stops, economic warfare starts. When currency war breaks out, physical assets become the only real weapon that matters. What does China do if the talks blow up? Move, number 1. Trigger the physical squeeze. China doesn't need to go to New York and buy futures. They only need to do one thing: mandate that all silver trading on the Shanghai Gold Exchange requires 100% physical delivery, and then ban any silver-containing metal bars of Chinese origin from flowing to London or New York. The global silver market has been running a supply deficit for 4 consecutive years. If China, the world's largest silver processing hub, stops shipping metal to LBMA and COMEX vaults, what happens? Every Wall Street bank sitting on massive short positions discovers they literally cannot source a single ounce of physical silver to close those positions. That's the legendary epic short squeeze, not the 2021 retail Reddit version, but a nation-state level physical demand event that has no ceiling. Remember what happened to nickel? Prices doubled in days, exchanges pulled the plug, but that only made physical prices go even more ballistic in the real market. Silver would do the same, only bigger. Move number 2, repricing the entire green economy. A deal collapsing means the end of globalization as we know it. China's next move: demand that any country purchasing Chinese solar panels and lithium batteries must settle in yuan, or better yet in physical gold or silver at a discount. Suddenly, silver isn't just a metal. Silver becomes the new oil. Its valuation framework gets rewritten from scratch. Move number 3, America's only response: the inflation death spiral. To counter the financial shock coming from the East, Washington's only real option is to massively accelerate money printing. Debt dilution, they'll call it. When dollars flood the system but physical assets are locked up by the East, domestic US capital goes into panic flight mode. Where does that capital go? Gold is heavy. Gold is expensive. Gold is being watched by every central bank on earth. Silver, a smaller, more explosive market, becomes the one exit door that everyone tries to squeeze through at the same time. The $150, $200 math. Let's look at the gold to silver ratio. Historically, it's averaged around 15:1. Under decades of paper money expansion, it's been distorted to 81 or higher. If the talks blow up and gold runs to $5,000, $6,000 on war and inflation fear, watch this. At a conservative 20:1 ratio, silver is 300 plus. Even at a modest 30.1 ratio with $5,000 gold, silver is 166 all. This isn't a fantasy. It's arithmetic. When the derivatives superstructure collapses and silver reverts to its monetary roots, every short seller who participated in suppressing the price becomes rocket fuel on the way up. Why $150 isn't crazy? You're just still living in the old world. If $150 sounds insane to you right now, that's because your brain is still operating on the low inflation, globalization forever firmware that the past 4 decades installed in all of us. Here's what you need to understand. The deeper theme behind the Paris negotiations is civilizational competition. In the age of AI and digital infrastructure, every high-performance server, every advanced chip runs on silver. The end of AI is electricity. The end of electricity is solar. The end of solar is silver. Look at copper prices. Industrial metals are already going through a massive revaluation, but copper's market is so big it can't gap violently. Silver is different. The entire global silver market is worth less than half of Apple's market cap. It's a small pond that can be moved by a very large wave. If the Paris talks collapse and we enter wartime economic mode, only 2 things hold real value: food and ammunition. And I mean ammunition in the broadest sense, including physical resources. When the derivatives casino starts to melt down, when the trillions of dollars currently hitched to the US dollar try to squeeze through the narrow door of silver all at once, no candlestick pattern on earth will tell you where the price is going. This is why you're seeing retail investors in the US and Europe quietly stacking silver coins. They're not speculating, they're buying insurance. They're hedging against the worst case outcome from Paris, the moment the dollar system stops functioning. Reading the minds in Beijing and Washington. Let's do something useful and get inside the heads of the actual decision makers. Beijing's hand. China's strategy is crystal clear. Play for time by giving ground on space. China owns the most complete silver supply chain on earth. If a deal happens, China trades silver price stability for Western concessions on Chinese technology access. That's playing it straight. But if the talks collapse, China unleashes silver as a monetary flanking maneuver, a direct attack on the dollar's soft underbelly. Beijing knows America cannot absorb 200 plus silver without triggering social unrest and complete inflation chaos at the street level. Silver is China's financial hostage at the negotiating table. Washington's hand. America's strategy is manage devaluation. They know the dollar's days of unchallenged dominance are numbered, but they want that decline to happen slowly and under their control. The plan? Use rate hikes and engineered global liquidity scarcity to force foreign capital back into dollar assets. But if Paris fails, Washington loses the ability to manage that decline. Their last-ditch play becomes a final great harvest. Use financial leverage to manufacture one last silver crash, wipe out all the retail longs, and then have the Fed or its proxy banks quietly accumulate at the bottom before the real move begins. Here's the simple indicator to watch that tells you everything. Watch who's pulling metal out of the vaults. If COMEX inventories keep declining by millions of ounces per month in the weeks after Paris, no matter how rosy the joint press release sounds, the truth is written in the vault data. The big players are positioning for the collapse scenario. The practical playbook: how to navigate the Paris storm. Okay, enough big picture narrative. Let's bring it back to what you actually do. If you wake up and see a joint statement, both sides smiling for cameras, don't chase, silver will pop on the headline, then grind sideways for a long time in a brutal chop zone. Strategy: sell covered calls at elevated strikes or play tight range trades. Silver likely holds between $80 and $100. This is a patience game, a wealthy person's game. The noise will eat you alive if you're leveraged. If you wake up and the talks ended early, both sides pointing fingers, that's your signal, that's the moment. Strategy: physical, physical, physical. Dump leveraged paper positions, because when silver goes to $150, there is no guarantee any exchange doesn't default or go dark. Physical metal in your hands is the only thing with zero counterparty risk. Mental prep. You will see mainstream financial media scream, Silver bubble. You will hear Fed officials jawbone the market down. Ignore all of it. When the system itself is the problem, the metal in your safe is the only honest answer. Gold versus silver. Why silver is the weapon right now? People always ask me, if silver is so powerful, why not just buy gold? Here's my answer. Gold is the shield. Silver is the sword. Gold preserves your wealth. Silver multiplies it in chaos. Right now, the gold-silver ratio is sitting around 60. If it reverts to its historical average of 20, silver's percentage gain will be 4 times what gold delivers from this level. That's not an opinion. That's the math of mean reversion. China understands this perfectly. The silver premium on the Shanghai Gold Exchange has consistently run above London's price for years now. That's not a coincidence. That's a real-time signal. Physical silver is flowing from west to east, from paper to physical. The Paris negotiations are, at their core, the West trying to stop that physical flow. They're fighting to defend a paper-based pricing system that's held for 4 decades. That system is cracking. Final warning, don't be the last one to figure this out. History always turns corners while most people are still asleep. Before Nixon slammed the gold window shut in 1971, he was still publicly assuring allies that the dollar was rock solid. Before the Hunt brothers bought silver in 1980, Wall Street was mocking silver as irrelevant. In Paris in 2026, the same movie is playing again. Different cast, same script. By the time silver breaks $100 or $150 and lands on the front page of CNN or Bloomberg, it'll be too late to position. At that point, you're not investing. You're providing exit liquidity for the people who got in early. Right now, silver is sitting in the eye of the storm. Every word spoken in Paris is directly determining your financial ceiling for the next decade. If you believe the US and China can genuinely patch things up and ride off into the sunset together, then get comfortable with a slow, grinding, sideways silver market and manage your positions accordingly. But if you see what I see, fractured supply chains, exhausted monetary systems, geopolitical fault lines that are fundamentally irreconcilable, then it's time to prepare for the $150, maybe $200 silver era that's quietly loading up on the launch pad. Closing thoughts, hold tight and watch history happen, friends. We are standing at a genuine fork in the road. The outcome of the Paris negotiations could leak through unofficial channels within days. When it does, the silver chart will give you the most honest read you can get. Don't get lost in the short-term noise. Lift your eyes and look at what's really happening. The existential competition between 2 civilizations, a physical asset volcano that's been capped for half a century, now ready to blow. If they cut a deal, we embrace the temporary calm and hunt for opportunities in the chop. If they walk away from the table, we need the courage to stand on the right side of history, holding physical silver with both hands and watching the old financial order get dismantled in the most epic short squeeze the world has ever seen. $150, $200. When paper money reverts to its intrinsic value, which ultimately is zero, silver's price becomes something far beyond a number on a chart. Thanks for riding this deep with me. If this analysis cut through the fog for you, please like, subscribe, and share it with anyone you know who's still getting their financial worldview from Wall Street talking heads. Wealth belongs to the people who can see through the lie and have the guts to position before the storm hits. This is your Frontline Report on Global Finance. See you after Paris.